gonna make it. We 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 gonna make it. Nah, nah, nah. Hey, what's up, people? It's Wednesday night. Your boy Trader Da here. Like I said last night, tonight we're gonna do some live trading on the forex market. Cause like forex is the only market. Well, actually, no, there's two markets. There's a few markets open at night, but forex has the most liquidity. That's a key word here. Trader Da here. Liquidity. So we're gonna do some live trades. I want you guys to see how it is in an actual real live trading environment. We talk about trading a lot here, but now we're gonna do some live trades. So I bought one of the guests, a friend of the show, my man Elmo. I'm gonna let him quarterback this. He's gonna show you a strategy. We're gonna talk about, just an overview. I'm gonna give you an overview real quick of the forex market. Forex stands for foreign exchange. It's the world's largest market. It's like $5.3 trillion a day. That's a combine of all the world stock markets. When you deal with forex, it's a currency pair. So you're buying one and selling the other, or you're selling one and buying the other. It's always done in tandem. It's never solo. So that's one thing to remember with forex. Also, the most traded asset on forex is the euro dollar. That's EUR/USD. That's the European Union and the United States dollar. That is the most uh, liquidity asset they have on forex is the US dollar. Also, you got the euro and the US dollar. You also have the US dollar and the Japanese yen. That's another good asset to trade. It's a few good assets to trade on forex. But the thing with forex is it's 24/5, which means it's open Sunday at 5 o'clock to a Friday at 5 o'clock. It's a 24-hour schedule. But that doesn't mean it's instant liquidity all times of the day. It just depends on the times of the day. See, we're based here in America, so we're going off the New York time. But when you're over in Asia, that's when you should trade the Japanese yen pair, because Tokyo, which is one of the world's financial centers, is the dominant market in the Asian trading section. So all trading pairs that end in JPY would be good to trade in the Japanese session. Well, I'm sorry, in the Asian section. Likewise, when the American session and the European session, when they overlap each other, which is from 8 a.m. in the morning to noontime, that's the most traded time frame in the world. Actually, that's the world's two biggest economies all over are going at it. They're interacting with each other. So yeah. So on that note, I'm gonna bring my man Elmo in. Introduce. What's up, Elmo?
What is going on? My camera is too high. You can't see my shirt. Hold up. You can see my hat, though. There you go. I was kind of out of frame a little bit, and I didn't like it. But what's going on, y'all? If you guys are not new to the podcast, you have seen me on here before. It might have been like a month ago now. It's been a while. It's definitely been a while. But tonight, I'm going to show you guys some, like Harold said, some live trading, because this is what I do. Almost seems to be every day. It's what it feels like I do. It's like every single day. So I'm not going to confuse you guys, and do a whole lot of craziness tonight. I'm gonna keep it real simple, real simple. I actually want to share my screen, so I can share my screen real quick. Give me a second.
100% live, people. We're doing it live tonight. And tomorrow we're gonna try to do it at least 2 times a week. Live trading. While he's fixing the screen, I was saying we chose
right
forex.
Here.
The stocks wasn't available, so that's why we did forex. All right.
So do you guys see my screen right now?
I have to add it on the screen. Hold on.
Okay.
Now.
Oh, there you go. Look at that. Look at that. So this pair, he was just talking about the JPY pair. So I'm gonna open up Chef JPY. This is the Swiss franc JPY, Japanese yen is what this is. Now, there's a couple pairs that move kind of the same. They're all correlated pairs. This pair right here moves not so much like the other JPY pairs. This one and the USD JPY move differently, but all of the rest of the JPY pairs move the same. So not to confuse you guys see on the right of the screen, you guys see USD JPY, CAD JPY, GBP JPY, Chef JPY, Euro JPY, NZD JPY, AUD JPY. It's a lot of pairs, but all of these pairs move almost identical. The only ones that are different are the Chef JPY and the USD JPY. The rest of them are pretty much the same. They move exactly the same. Now, is there a way I can see people's comments on here and stuff when they comment? Or I can see it? Oh, I see it. I see it on the right. Okay. So if someone drops a comment, as I can see a comment. But as of now, I'm just going to, get started on this thing. So you guys see that I have a pattern here hidden. I'm actually going to erase this pattern and rewind this thing to how we even get to this point, because to get to this point, it takes some work, but there's a method behind all of this madness. So let me actually erase this.
Hey,
What
what
we
you
do in trading.
can I just intersperse something?
Go ahead.
As we were saying on the previous podcast, I talked about the price action trading system, and I was like, there's different indicators. The point I want to make to the people out there is this is like technical analysis. What's going to happen is this strategy can be used through any market. That's the best thing about technical analysis. It's not just for the Forex market. It can be used on a stock chart, crypto chart, futures, a commodity, options, so on and so forth. So that's one thing to remember. That's all I had to say.
Oh yeah, you good, man. So, you guys see that this chart is blank. There's nothing on this chart. This is people. If you ever hear someone say they trade naked, this is usually what it means. I don't use any indicators when it comes to my trading. I sometimes use the RSI, but for the most part, I basically made myself the indicator, so I don't rely on indicators because indicators have a little delay, but they're accurate. So I told myself, okay, if I'm gonna come here and learn this thing, I'm gonna take it seriously and learning it. So I dove in and I asked 1.5 million questions to get to this point of being able to go from a naked chart with nothing on it to be able to pull profits out the market. And that's what all this is about. So what we do is with anything this is not just trading Forex, but trading crypto, trading indices, trading anything, metals. What you want to do is start from the top down. The reason we start from the top down is because the past will always show you the future. So meaning that my stuff is very organized, very color coordinated. What I do is I have black lines set up for my daily levels of support and resistance. And why support and resistance are so important is because they're just showing you points where price is going to come to again. It's not guaranteed, but it's like a 95% chance they're going to be back there again. So you have to pay attention to that. I'm not saying anything in here is guaranteed, but if you have strong levels of support and resistance, there's a high chance that price is going to come back there again. So why not take notice of it? So what we do is we start from the top down. So right now you see that D up there. That means we're in a daily time frame. The 4H is for 4 hour, 1H is for 1 hour, 15 M is for 15 minutes. You can go to any time frame. I honestly don't trade anything lower than the 5. I only go to the 5 minute on major pairs like US 30 because it moves so quickly. You can make money on a 5 minute chart. But the big money moves usually happen on 1 hour and a 4 hour. The daily is just going to show you the structure that gets you to that 1 hour and a 4 hour move. So what I do is I come on here, I look for levels of support and resistance. So I'm going to type in support. And support equals when price is being held up by a point. Some people call it the floor because think about we're in the floor. The floor is holding you up. Now, resistance in reverse, resistance is the opposite of support. It's AKA the ceiling. Price being, not Bryce, or Brent's. Price being held down. That's why they call it. You might hear it be called the ceiling and the floor. It's literally the same exact thing. Support and resistance, ceiling and the floor, same thing. So lines of support become lines of resistance in the future and vice versa. That's how this works. So on here, you'll see if I drop a line, like look for a nice little level on here. You guys might just see a bunch of up and down movement, but I'm looking for points of, that stand out to me, like a point like this, where it's just 3 lines in a row and price couldn't break it. So I dropped this major line right here on my daily level. And like I said earlier, the past is going to show you the future. So look into the past right here. What do you have? This is support. This is support. This is resistance. This is resistance. This is support. And it's all on the same plane. This is all just one line I just drew. But support and resistance always comes back into play because price repeats itself over and over and over. Look how far back this resistance goes, but this support goes. And this was drawn based off a point from March of last year. And this points go all the way back to October, September, February of 2014. That shows you how far in the past that things come back into play. So when you find you a nice level of support and resistance, it's solid. When you have evidence from the past showing you that, hey, this. Oops, I erased the line just now, showing you that this thing is being supported in the future. Hold on real quick. I make a joke on my classes all the time. I use a Beyonce line, to the left, everything you need to know is going to be on the box to the left, because I'm putting it in the box and show you where it's at. But that's basically what happens here. So let me drop this down a little bit more. Right there is another good level right there. I'm actually change the color from this muddy red to a nice green. Look at that. That right there, support. Look at all that support. In the future, it became resistance. It turned back to support. Support again. So the reason why this is resistance, the reason why these levels are so important is because they come back into play over and over and over. And when lines come back to a major level, it's time for you to make some money. Like this, even if you just all you know is support and resistance, the basics of trading, you can make money just on these basic moves right here, because you know there's a chance that price is going to either reject this line or break this line and reject this line. But something major is going to happen at one of these lines. Now, looking at these lines right now, if you look to the past, you'll see that, hey, price has been back to these lines multiple times over and over and over. Let me bump this up a little bit more, about right there. And you guys might be like, okay, I see a lot of stuff going on in the middle of this, but just look at that. Look right here. What do you see? Resistance, support, support, resistance, all resistance right there. Again, these lines come back into play. And if I look way in the past, look at that. Look at that major level right there. That's a huge spike. That's a crazy spike.
As I want to say to the people, the more time those lines are tested, the stronger they become. So the more times they hit it, that's the stronger it's going to be a support or resistance. Or like Mo said, once it's breached, though, they flip. Support now become resistance. Resistance now becomes support. So those things to keep in mind. But like this is the basis of technical analysis. This is the basic part. Like as he said, it's possible to make money just from this right here.
Oh yeah, this is real basic. This is universal rules that anybody wanting to trade or who is trading should know. So I'm not going to go through and draw every level of support and resistance on this daily chart. I'm going to drop down because since price is right here in this little area right here, I want to really focus on this to show you guys, what's going on, how you can make money from this. So I'm dropped down to the 4 hour. On the 4 hour, hey, look at this daily. Hold on real quick. Remember, these black lines were just drawn on the daily time frame, right? Look at this touch right there. Look at that touch and go. Price touched that and skyrocketed off, came back to it, and is now playing under it. Now, remember, I did rewind this some. I'm going to show you guys exactly what happened and how we made money off this big buy up. I'm gonna get to the pattern in a second. But just see how when you drop down to a smaller time frame, you see even more how price respects those levels. Like, look at this. This was the first line I drew. And look at all those lines just tapping it. There's all those wicks hitting that thing because it's showing you that that line is being respected. And the smaller time frame you go, the more you'll be able to see how respected that line is being. So let me erase all those boxes so we don't need them. So now we're on the 4 hour. We can do the same exact thing. And again, don't go line crazy on here. But I have all my stuff color coordinated, so I know that if I have a black line, it was drawn on the daily time frame. If my line is gold, it was drawn on the 4 hour time frame, and if it's green, it was drawn on the 1 hour time frame. So you guys see the same thing on here. This is a dead giveaway right here of a nice level of resistance or support. You see all those wicks are just stopping right there. And if you guys don't know what a wick is, a candle comes in two pieces basically. There's a body of a candle, which is this quote unquote fat piece, the full piece. Then there's the wick, which is at either end.
That's the extremes of the candle. That's the high or the low of the day, and the body is the open and the close.
Yep. You see how some candles will wick like crazy? It wicked like crazy, dropping down, and then flipped over and engulfed that whole wick right there. And so some people solely trade off wicks. Like they trade candlestick formations, which is actually pretty powerful also. I remember when I first started trading, I was so much into candlestick formations, and I was like, I don't understand it. Why don't I get it? And now I don't even use it. Which sounds crazy to say.
Yeah, you don't use candlesticks?
No, I don't. Because the way I trade now with harmonics, you don't. I don't say you don't need the candlestick formation, because usually the candlestick formation happens at on the pivot points. So it's happening at your pivot point.
So that's
you're not in control of what's going to happen.
Yeah,
we're trading for the future, not for
like
for
a lagging indicator. Then so it's like a lagging indicator. What you're saying for the harmonic, it lags behind the actual move.
The harmonic is so far in the future. That the candlestick formation that's going to happen there doesn't even matter.
No, that's what I was
See,
saying. I said the candlestick pattern is it's like a lagging indicator from the
oh
harmonic.
yeah.
Okay,
Definitely. So by the time
okay.
someone sees the candlestick formation happening, I'm
Started to
already
happen.
in trade and profit.
Okay, yeah. I see. I keep hearing about the harmonic scanner. I need to check that out. Like I told you, I
Harmonic
just trade
scanner.
support resistance and this right here candlestick. That's why I use the forex and I use the RXI relative strength. See, everyone out there, all these terms that we're using is terms I actually put in my book, and it's a free book. It's price action trading system or the PATS. I talk about candlesticks. I talk about support resistance. You know, that's like we both said multiple times. That's the basic of any trading system. It would
Oh
behoove you to
yeah.
learn these.
It's the foundation of it. So how I trade harmonics is not it's not exactly how you see in a harmonic scanner. So even the harmonic scanner being an indicator itself, it lags. It's a lagging indicator. It doesn't it might find a pattern maybe a few minutes, maybe a few hours before it happens. But when you can find a harmonic pattern yourself, you can get ahead of some moves, sometimes weeks, sometimes months in advance because you know what's coming because you know, okay, when price hits this certain point, there's a high chance it's going to do this or that. So it gives you sometimes a two-way go. I'm going to show you exactly how that works on this cipher pattern too, and how I can even set my take profit so far in the future before I even get there, before price even gets close to it. So you guys see all these green lines. I did the same thing. I went and I found wicks on candles and I dropped them in nice levels of support and resistance. So you guys see all that support right there, all that support, so much support. It's like a good family. You're just supporting this thing right here. Look at that resistance. You guys see it right there. So let me erase, and let me go to where price was at when I first drew the cipher pattern. So a cipher pattern is just one of many harmonic patterns. Honestly, there's like 8 or 9 harmonic patterns. I personally only trade 3 of them. I trade 3 harmonic patterns and head and shoulders. That's the only patterns that I trade. Why is that? Because I tell people on my team all the time, if you cannot master one pattern, you don't need to learn all 8 of them or all 9 of them. If you cannot find and master one, what is adding 9 patterns going to do for you? Not a single thing. It's like if you
That
can't drive a single car, why would you buy 5 cars? If you
Hey,
can't
can
drive
you
one of them, why
list
would you
those
buy
3
5?
patterns?
That I trade? Yeah, I
Yeah,
got you. I personally trade my number 1 pattern, the Gartley.
Bartley.
Yep, that's what's on my hat right now. Gartley
Okay.
pattern. Trade the bat pattern. I trade the cipher pattern, and I trade
Head
head
and
and
shoulders.
shoulders.
See, the thing with the head and shoulders I don't like, it's kind of a long place pattern. Like it takes a while to form
It does.
in
It does,
comparison to
but when it hits,
other
it hits.
patterns. Yeah, that's true. It's very strong. It's a very see, like I say, like here's what some of my see. Okay, that's my problem because I'm a day trader.
Mm-hmm.
Head and shoulders is more of a swing to long term approach. That's why
It is.
I rarely catch it. Matter of fact, rarely I never really do head and shoulders because it's a long pace. It's a long term thing. Not really long term, but it's a longer forming pattern. That's what I'm meaning to say.
Oh, that makes sense. That definitely makes sense. So what I'm gonna show you guys real quick, right? So the head and shoulders is definitely it's great for swing trading because you know the momentum is changing from where it went at. So these levels of support and resistance are so important because they basically show you price trying to gain momentum to bust through a level. Think about, I tell people all the time when it comes to trading harmonics, think about if you throw a tennis ball at a wall. If you throw a tennis ball at a wall, you're gonna expect it's gonna hit and come back at you. That's when you do your sell limits and your buy limits, your pending orders. Almost all harmonic patterns are set with pending orders because we're finding the potential where the pattern is going to turn around at. We're finding the potential pivot point way in advance. So expect that pivot point, that price is going to fly somewhere, and then hit it and turn around. That's what we're expecting to happen with the harmonic pattern. No matter which direction it is, if the harmonic pattern is bullish or bearish, you're expecting it to hit a point, turn around. This turnaround point is your entry. Now, I've been doing harmonics so long. It's been over 2 years now. I remember when I first started doing harmonics because honestly, when I first started trading, I didn't have any type of strategy, any way, shape, or form. I was just in the markets like, hey, I think I see something. This might be a pattern. Now, this pattern right here,
That's for
it's gonna be a
everybody.
little funky. I learned the parameters of it, and I was able to dissect it to the point where I can make money in both directions off harmonic patterns. Now, every harmonic pattern is not going to be as clear as the one on my hat. Some of them going to be, it's going to be some choppy movements in the middle, but as long as the grand scheme of things still hit your rules, you can get in this trade. So with this cipher pattern, with any harmonic pattern, we look for a thing called an impulse leg. Let me type this out real quick. Impulse leg. Now, impulse leg doesn't have to be one candle. It's just a hard push in one direction. For example, right here, see this hard push down? That's your first impulse. Now, the example I use, I want to say I used it last week on Facebook Live too. I did my one of my trading sessions. Look for a stair step movement, meaning that with a cipher pattern, it's the one I trade that's very different from the rest of my patterns, because you see the harmonic again on my hat, the Gartley pattern. It's almost like a bow tie. They come together in the middle and they separate the same way. But this cipher pattern is kind of like stair step. So it goes down and then it makes a move up. Then it goes down. Then it makes a big move up, and that's your entry. That's your cipher pattern. So you guys kind of see what's going on right here. I actually found this pattern when it was like this. I was able to get a lot of pips from this, send to my team, get a lot of people a lot of money from this. I'm going to show you guys how levels of support and resistance play into, getting some take profits, some guaranteed take profits out of this too. Because honestly, when you find a pattern very early, there's no guarantee it will complete, but it does not mean you cannot make money from it. So for example, you see our impulse leg right here, which was this point here to here. That's your impulse. I'll make this a nice pink line. Matter of fact, I'll make this a nice thick pink line so you guys can see it. Nice and thick. Bam. There you go right there. That's your impulse leg right there. So now we have this impulse leg. I'm grabbing my handy dandy Fibonacci tool, which is probably one of the ideal tools you need in harmonics. You have to use a Fibonacci tool. If not, your pattern is going to be 100% wrong. You have to use a Fibonacci tool. So what you're doing with this Fibonacci tool is grabbing from this highest wick up here to this lowest pivot point.
I don't think I really didn't explain Fibonacci to them, so I don't think they understand the golden ratio. Yeah, what was it? 1, 3, 5. Was it 38.2, 65.7?
So
I forget the exact ratio.
Levels. My Fibonacci right now has 1, 236, 382, 0.5, 618, which is a golden level for me trading the Gartley, 786, 886, 1, 113. I use these certain patterns, these certain numbers for a reason. All these numbers coincide with harmonic patterns in a certain way. This is why my Fibonacci tool is color coordinated. Because again, I told you I try to keep things very organized. So I know that with a cipher pattern, I need price to retrace between my 382 and my 618. You see this blue right there? So I know that if price is in that range, my cipher pattern, the first leg is good to go. Now, in TradingView, you'll see these are called XABCD patterns. So this first point, I'll make this a nice bold blue, is going to be not just text, it needs to say X, because all these go first, X to A. A will always be your first pivot point on a harmonic pattern. X to A. So X to A equals B. I'm not doing algebra, I promise y'all, but this is just how it's set up. So you fib out X to A. Hold up. Let me erase this. Fib X to A equals B. And B is 0.382. How many people are lost right now to 0.618? I know some people are lost right now. I'm like, the hell is he talking about? But I promise you, this is all going to make sense. I'm going to show you guys how all these different amalgamation of numbers and lines are going to make money, because that's what this is all about. This is about making money, from your phone at your own time. That's what this whole thing about, literally. So you see X to A equals what? It equals B. B is your retracement point. So this little blue box is my B verification zone, basically.
And a retracement is basically when the stock or whatever, in this case, when a currency, it goes up, then it gets pulled back to the point, to like a certain point. That's the retracement, basically, people.
Yep, price hit the brakes and turned around. So now I have this is my first step of my stair step. Remember I told you guys earlier, this kind of moves like a stair step. So now I have my X to A to B. So that's my first fib. Now my next fib is going to go This is how you find your potential C point. Because again, these go X, A, B, C to D. D is your entry. Your potential C point is going to go from A. Where's my type tool at? Fib A to X equals C. C is 1.272. I'm about to confuse you guys again. A lot of numbers here. This is how I trade. I'm telling you guys, it sounds confusing now, but once you learn it, you can be like, oh, I see it. I am one with the Matrix. That's how you're going to feel. You're going to feel like Neo in the Matrix when he dodged those bullets for the first time. So now we're going to fib from A back up to X. About right there. Now you see my price landed down here in that 12721414. A wick outside of it is 100% fine as long as price does not close outside of it. So since we had this, I was able to be like, okay, I see that this is a major daily level. Remember, daily level. This right here is a daily level. I made this nice and bold. That's a major daily level right there. Price is under it. What I did was I told my team, when price breaks above this black line, just know it's probably back on the rise. So now we're able to get in from not just waiting on the D entry. See, the harmonic scanner gives you only D entry. We're now set up to get price from C to D. Now, and on a cipher pattern, your C to D move is the longest move. So you have a high chance of making a lot of pips on it. So now that I have that information, I can draw my whole potential pattern, because how you get your D is, and I hope you're getting confused by this, but D is going to equal, this one's easy to remember, fib X to C. That equals D. D is simply, not C, D. No, not CD, but D. There you go. D is simply 0.786. Again, all these numbers mean something. I promise you this is not algebra. But look, from here, top point, bottom point, 786 is hidden. I'm actually going to hide these right here because they're right in my way. I'll erase you. I don't need you. But you guys see 786 is right here. So now I can draw my whole pattern because I know that's my last turnaround point I need. Even though price is nowhere near it, I know there's a high chance that when price gets here, it's going to turn around. So I can then drop a line right here and make this a sell line. This is how far in advance we can do this. Like, this is super, super far in advance. You can get so far ahead of this move. You can simply place your order, let it do its thing. So now I have my whole move set up. I can erase this information. You guys don't need it anymore, or that. So now I can grab my cipher tool, which is located right here, cipher pattern, and go X to A to the highest point of B, B to the lowest point of C, C to D. I have my whole pattern drawn out, and it's a whole leg that's not even completed yet. Again, this pattern is going for the future. So by me knowing that price has already hit this lowest low, I want to say on this trade, I actually had a 400 pip take profit and a 7 pip stop loss. That's an insane ratio. Let me see. Was it actually 400 pips on this? Let me see where we're at. Yeah, it was a 400 pip.
That's a lot.
Yeah, 400 pip take profit, 7 pip stop loss. So
All
we
right.
got in this trade.
It's almost time though. It's almost a half an hour. I normally go like a half hour.
Oh, my bad, man. I'm about to get into the sauce. I'm about to get into the sauce real quick. Give me like 5 minutes. Now I'll explain this real quick. Just a quick little 5 minutes. So by me doing this, now play this out and let's see what happened. I have this, and now this point right here can be my take profit. My take profit is very small on this because I bought this all the way up. But my take profit is based on support and resistance because you guys see there's a high point right there. It's the only high point in between all this move I'm expecting to happen. So let me play this out and look what happened. That's playing very slow. Let me speed this up a little bit. So we bought this right here, rolled it up, hit take profit 1, pause it. My take profit 1 on the way up was right here. Now, why is that? Because that's my last low point, AKA a point of support and resistance. Let me drop a line right. Just need to say take profit on it. Take profit. Next take profit was right here at this high point, this previous high. And from right there, we made money all the way up. Let me play this out, show you guys what happened real quick before I get kicked off of here. I get the boot for talking too much. But you see, price came right above that take profit right there. Came back to it, retested it. That could have even been a chance for a re-entry. But you guys see, price riding. Price came all the way back down, played with us. But guess what? Guess what it did? Guess what price did? It did what it was supposed to do. It played with that zone so heavily kept on going. Went to take profit 2. So at that point, I want to say it's like 250 pips up from there. At point it hit that point and dropped back down. So again, we're making guaranteed money from a trade that only had a 7 pip stop loss. 7 pips is nothing. You can go a full lot on 7 pips and not lose very much in comparison to what you can win with 400 pip take profit. So you guys see price, it took its time on the way up. And look, it hit take profit 3. It hit take profit 3. And this is how support and resistance comes back into play, right? This was our sell. I know you see a skyrocket up there, right? This is our sell point. Price hit our sell point, went right to take profit, right back down to take profit, and then skyrocketed off. So you would have made money all the way up and that little take profit sell, and then been out this trade, not worrying about it. Because all the rest of this movement after it does not matter, because again, support and resistance comes back into play. Because look right here, this take profit right here was just on support and resistance. You see it right there? That's this right here is, let me go. This right here is resistance, support, support, resistance, resistance, resistance. And that's our take profit. Like on the whole time up, we just rode support and resistance, making money the whole time. And that's a simple way, you know, show you guys how to trade some harmonics. Now, know that I definitely trade harmonics. Seems to be every day, or I find a different pattern every single day. So it's definitely doable. If I can do it, you guys can do it. And I say that all the time because it's true. So, okay, I'm done. I'm not saying anything else. I ain't giving no more sauce away. You know, this is a simple harmonic, you know, cipher pattern thing. I know it's talking a lot, but you have to cover the basics to get to the advanced stuff. I try to cover the whole spectrum just now of support and resistance, getting to the point of entering a pattern way far in the future. So like I want to say almost a week ahead on this move, almost a whole week with a 7 pip stop loss with a 400 pip take profit.
All right, so do you have standard lots? Because that's 400 pip. That's $4,000, people. It depends on your lot size. That'd have been a $4,000 profit, and against a $70 per a potential $70 loss to a $4,000 profit. I got tongue twisters. That shit is so amazing. I got tongue twisters. So basically, what he's trying to say is these scanners give you powerful signals. If it allows you to jump into a move 1 week into advance, that gives you all type of leeway and leverage to because what we always say about these technical analysis, it allows you to get your premium entry exit points, your premium buy and sell points, because you want to see how the market goes. But that's the main thing about these technical analysis. You're increasing your odds of a better trade. All right, Elmo, my man, thank you. Yo, come on, like once a week, so we can do a trade tonight, man. So I don't know.
Got you, man.
Question. The question for the guests is for myself also. So this harmonic scanner patterns, is this an automated pattern, or do you apply it yourself? And by that, I mean, what currencies do you think is better for, or do it just any currency it can fit on?
No such thing. Harmonics work on everything. And I'm not even exaggerating. They work on gold. I love harmonics on gold because gold follows the rules. I love harmonic on US30 because US30 follows the rules.
Yeah,
they work on everything. They work on crypto. Like, do I have on this right here? Let me see. Oh, I erased it off here. But you look right here, there's a harmonic pattern in the middle of this right here on US30. Look at this. There's a harmonic pattern right there. And I dropped this to my team also. And this joint went for like 15,000 pips. 15,000 pips.
That's $150,000.
Yes, 15,000 pips. That's a Gartley pattern right there in the middle. Even if you would have came in here with the 1 cent, you would have still made bank on this. So I mean, you know, US30 ain't gonna play no games. US30 plays no games.
Yeah, people, that's the 30 biggest
too, man.
He's in the country. 30 biggest companies.
This is what I tell people all the time, man. It's good to learn a skill like harmonic patterns because harmonic patterns will show you the future of what price can possibly do. And when price doesn't do it, you're like, okay, my pattern didn't win. But for the most part, they follow it. A lot of people don't actually trade it. And we can get way ahead of the moves like on something like US30. Because US30, I had one trade that was like a 2,000 pip stop loss in US30. And it was only like an inch of movement because US30 moves so crazy. So it was a 2,000 pip stop loss, but the take profit was 17,000 pips. So you got to trade that with like 1 cent or 10 cents.
Yeah, you got to move that back. Yeah, you can't. $2,000 pip. That's $20,000. That'll roll you right up. FOREX is unforgiving. See, the difference between stocks and FOREX. Stocks, once you get down to zero, you can't lose more money. Forex is not like that. If you got the leverage in your account and them pips go against you, you can just it does not stop. Forex can run you. It does not stop.
Yeah, but you see what's forming up on here, right? Head and shoulders forming up right now on this.
Yeah, right there. I can see the head and shoulders
Yeah,
at the very end. Oh, that's
forming up right there.
It's my screen. Yeah.
Right there forming up. It's ugly. I drew it, but it's right there forming up.
Yo, yeah, you
Nice
just waiting
little head and
on that
shoulders
next
movement.
line. What chart is this? A daily?
This is the 4 hour.
Oh, okay. So you got like about okay. So in about in the morning time, you should know.
Oh yeah, and this is another part of a Gartley also. There's so much going on, man. There's a bigger pattern here too. I'm gonna draw it real fast before we get off here, but there's a bigger pattern forming up. Just from me doing one fib, I can see it right here. It's a bigger pattern forming up on here, right there. Gartley pattern. Let me actually hide that one. But it's a bigger pattern forming up. So these patterns actually play a major role, man. And what I would do with this, if I see price get above my trend line, which is right here, it's black, so it's a daily trend line. I'm getting the trade for a buy. So I know it's probably going to tap this line and head up, right? So either here,
and then you can flip back to sell,
or there. Yep, it's going to hit one of those two spots, and that's one of the biggest things of harmonics. Even if the harmonic pattern doesn't play out, you can just see what's happening or what's trying to happen.
All right, Mo. Thank you, my man. So, like I say, we're gonna try to do this once a night every week. I want to send Sanchez, but he said he was busy. So
it's fine. It's fine. Oh, I literally just got off a call right before. I was like, oh snap, I gotta do this podcast at 8 o'clock. I was doing an hour-long session just now with somebody right before this.
That's what's up, baby. Trade or die. That's what we do. Hey, that's the motto for everyone. My man Elmo Trades. All right, man. So go ahead and promote your joint.
Hey, you guys know, find me on Instagram, Facebook, YouTube at not that. One more time. At L Modern Trades, no space. I'm on every social media as that, even my YouTube channel. I have not uploaded my YouTube channel in probably like 2 months, but best believe I'm still teaching every single week. I'm trying to keep some of the sauce back from YouTube because I got an idea I'm working on. So I'm just going to, put them videos out there, but they ain't out there yet. But they're going to be out there. So just know there's a lot of sauce to be given out, but it all in on YouTube. But it's a big chunk on YouTube. There's a day I made 786 pips on gold in a single day. That's on there. Days when we have $400, like 400 pip days on from Monday, it's on there. It's on YouTube. So if you guys want to see that, it's all on there.
That's what's up now. All right, now here's my last question. This is for me. All right, because my schedule constantly changing because of I do business. And I work actually. I have a job now and I do my own business. So my schedule constantly changes. So I don't have the time to day trade like I did during the premium hours. So now I'm moving back to the nights. In my experience, like I say, I would go with the US dollar, Japanese yen. What would be a recommendation? Never mind, because you already explained that. You just throw the scanner on the chart. It doesn't matter what currency. I know.
And see, you keep
get back to one of my questions though. So you just go through every single currency, or is it like an automated program?
None of this is automated. This is all me drawing this stuff.
No, I mean, so you do this on every single currency.
Yeah, if I see it, I draw it up.
Oh,
because
you see it?
Because harmonics are universal. They work on everything. So if I see it, I draw it up. If I don't see nothing on it, I'm not going to chase a trade. Now, harmonics is not the only style of trading I do, but it's one of the most guaranteed ones. If I don't see the trade, I ain't taking it.
You don't force it. Facts. That's how it is whenever I day trade. If it doesn't meet my parameters of what I like, I won't touch it. All right, man. So on that note, Mo, like I say, today's Wednesday. What's up with doing this every Wednesday? Is that good?
Let me think. It's doable. It's definitely doable. It's doable.
All right, so we're gonna try to do this every Wednesday, people. We're gonna try, show you different patterns in Forex. Because, like I say, for people that have jobs during the day or what have you, Forex at night, good an hour. Man, people only knew like an hour could be like $1,000.
I do an hour. I probably do an hour a day, probably more than an hour a day when I'm teaching. But for the most part, it's about an hour a day. Nothing major.
Not a state. If they only knew, man. But on that note, my friends, I'm about to log up myself because I got pizza coming and all kinds of things. All right, so yeah, we're gonna start something every Wednesday. Elmo and Trader God. We're gonna make some moves. All right, Mo. I'll holler at you.
All right, man. Be easy, man. I'll see you guys. I'll see you next one. I'll see you next Wednesday.
All right, fellas. All right, people. Yeah, I just want to say, I'm in a new group on Facebook, and I really like it. It's called the Black Collective Stock. I forget I think it's the Black Collective, something like that. That's a good group. Bunch of stock traders in there, a bunch of investors. Like this night, I took it to FOREX because I've been doing stocks lately. It's trade or die, like doing multiple markets. The foreign exchange market is open tonight. The Nadex binary options market is open tonight. We're gonna start trading Nadex also. That's a real easy market too. That's like the easiest way to trade, actually. Nadex. In the upcoming podcast, I'm gonna get away from trading. We're gonna do some more banking. We're gonna talk about the differences between a bank and a credit union. Why you should invest in a credit union and not a bank. For the main reason, banks are for profit, credit unions are non-profit. Credit unions are normally for the community. Banks are not large corporations. This and that and this. You know how to get loans. We're gonna make it business orientated and financially also instead of just 100% trading. Even though it's trade or die. All right, man. I hope you guys learned something. See, that's why I really prefer people to read that book. Because everything that he just talked about, I put in the book. Now it's not like I know everything, but I cannot emphasize this enough, man. Whenever you technical trade, support and resistance, candlesticks, highs and lows. That's the basic of any trading strategy through any market around the world. And that was what that book was about. That was the basis of a trading system. So if you guys read that book, just understand the simple part. When people talk about things like this, you would start understanding that. That's why I would. It would behoove you to just. It's only 14 pages. That would give you the blueprint or the framework. Um, possibly start trading because, like you say, the man made $7,000 in about an hour. That's pretty good, but actually for the forex, that's pretty. That's like normal forex. Actually, you have the capital. That's pretty. That's like a normal forex day. So yeah, people, you should really learn about the foreign exchange. It's all about diversification. Add more things in your portfolio, not just stocks. I did a podcast on diversification. We might do another one so people beat that in people's head. It's not just stocks. It's stocks, currencies, bonds, uh, futures. There's different type of investments. Never put your eggs in one basket. That is what it's all about. Income streams. All right, people. On that note, you guys have a nice night. See you tomorrow. It's your boy Trader Die. We gonna make it. It always come at the end.